All right, let's get started. I'm going to share my screen. I'll just let my team confirm with me that everyone's going to be able to see it.
Yep, what's up?
Great. Okay, well, thanks everyone for coming to our webinar today. So I'm Mike Shepard, CEO of Power Technology Research. Just a short note, that picture was taken a few years ago, so look a little bit different. This is pre-corona, post-corona times, you can think about it. So anyway, let's get started here. So, well, thanks again, everyone, for joining our webinar. I'm CEO of Power Technology Research, and if you would indulge me, I'm going to briefly tell you a little bit about our company before we get to the good stuff, and it'll be presented by my colleagues, Saqib and Rafe, who are with us today. So our company was founded 5 years ago to better understand the recent and upcoming shifts to our electric infrastructure. As a result, we focus on 2 industry verticals: the power grid, also known as transmission and distribution, or T&D, and new energy. We pride ourselves in how we approach research by upholding what we call the 3 laws of PTR, and that's diligence, transparency, and digestibility, sans fava beans and Chianti. By diligence, we mean bottom-up research wherever possible and stemming from our knowledge that each power grid is unique. By transparency, we mean our customers will know all important assumptions that go into our research, not just the outputs. And by digestibility, we mean all stakeholder perspectives are considered, allowing for use of our research throughout an organization. Within Power Grid, we focus on everything inside and outside the substation, from transformers and switchgear to HVDC and FACS systems. In new energy, we cover, you can think about it as the agents that interact or may soon interact with the grid. That includes energy storage, commercial and off-highway vehicles, DC power grids, and of course, while we're here, EV charging infrastructure. Now let me introduce you to my colleague and Executive Director of Research, Saqib Saeed. Floor is yours, Saqib.
All right, great. Thank you so much, Mike, for the introduction. I welcome you all to this webinar on electric vehicles and EV charging infrastructure. My name is Saqib Saeed. I am the Executive Director of Research and Consulting at PTR, primarily focusing on e-mobility and power grid sectors. Along with me, my colleague, Mohammad Rafi Khan, he will be covering the EV charging infrastructure market, and he is the lead analyst of e-mobility at PTR. Let me very quickly start with the agenda of the presentation today. There are actually 3 sections of the webinar presentation. The first one is focusing on the EVSE service that we have at PTR, looking at which aspects of the market are being covered in this service. Second section is focusing on the electric vehicles themselves, looking at which key markets are there on a global level, how does the market sizing look like as of now, and what does the forecast say. We'll look at some of the ZEV targets by different countries. How do they compare against each other? We'll do a quick deep dive into this EU's climate action plan, looking at how new targets have been revised as far as the greenhouse gas emissions from transport infrastructure are concerned. And then towards the end, I'll discuss the maritime industry as well, where we look at how electrification is not only impacting the traditional transport sector, but there is already movement happening in the maritime industry. And then towards the end, I'll also discuss the micromobility 2-3-wheelers market as well. Next, Rafe will be looking at the EV charging infrastructure, looking at policies and incentives, how these are very closely coupled, looking at the forecast, what kind of volatility exists in the forecast, and then the market sizing, very similar to the electric vehicles themselves. And then towards the end, a bit of a flavor of qualitative analysis as well, looking at from the supply side at how the business models are evolving. And towards the end, we'll have 15 to 20 minutes reserved for the Q&A session. Meanwhile, if you have any questions during the presentation, please feel free to already post those questions while we are presenting. To start off with a very quick overview of the EVSE service itself. It is a package of information that we have in this EVSE service, starting off with the traditional market sizing, where we are looking at not only the annual sales of EV charging infrastructure, but also the installed base. In terms of the time series element, we're looking at historical years from 2018 to 2020, and then the forecast years from 2021 to 2026. We're already in process of extending this forecast to 2030 in the upcoming update. Next, you'll see that I, along with Rafe, will discuss this in detail, that how e-mobility market, as of now, is very strongly coupled with the policies and incentives announced by different governments around the world. It's not only the investments in the public sector, but also in the private sector, which are really driving the market forward. It really poses a question that if this is the way the market is driven forward, what will happen when there is, let's say, rollback of some of these incentives and policies? So that's why in this service, we've really focused on what kind of policies and incentives are already there. We'll actually look at some examples like China, like Germany, and see how momentum is being pumped into the market of EVs and EV chargers through these policies and incentives. So this becomes a separate element in our service as well. And then on top of that, looking at the comparative analysis, that who is doing what, who is winning at this point, especially the market shares point of view. We're looking at the charging infrastructure, both from AC and DC chargers point of view, since oftentimes it is different set of manufacturers operating in these two categories. So it makes sense for us to also look at the market shares, both for AC and DC chargers separately. Key market trends is more of an analysis done by our team of analysts, sort of extracting the key insights from the data, how these two technologies are competing against each other, which new products are being launched, and what's the impact of that on the forecast. All of that is summarized in the key market trends element of the EVSE service. And then another key focus is on the supplier profiles, understanding the top 15 EV charger manufacturers. That's where we have focused on which charging manufacturers are winning at the moment, what are the mergers and acquisition activities going on with these hardware manufacturers. And at the end, everything is sort of compiled onto this Power BI platform, which makes it very interactive in nature. We're working with more than 200,000 data points in this service. So that's why a platform like this makes it very easy to extract key insights from the data. Forward, just to describe how the research was conducted, and also sort of look into how this presentation actually has been designed. Primarily, everything is driven from electric vehicles. There are 4 types of EVs that we focused on because they're very strongly correlated with the charging infrastructure. First of them being the most obvious one, that is the passenger electric vehicles. Then we have electric light commercial vehicles, which is the commercial vehicles weighing less than 3.5 metric tons. And then we have e-buses and e-trucks, which are the commercial vehicles which weigh more than 3.5 metric tons. And you can see that there is direct one-to-one correlation between the electric vehicles and EV charging infrastructure. And that's why I'll be focusing on the first part, which is the EVs, and also looking at how government plans and policies are impacting the EV market overall. And then Rafe will discuss on the bottom half of this lecture, where we'll talk about the EV charging infrastructure, very similar to how our service is structured too. A little bit about the market sizing segmentation, because this is the core of the EVSE service that we have. Primarily looking at the 3 types of charger families, AC and then DC, further segmented into 2 parts, DC low power and DC high power charging infrastructure. In terms of the charger capacity, there are 7 categories where we're looking at the segmentation of the market sizing, where AC chargers are primarily being segmented, or the cutoff is basically 10 kilowatts, where we are segmenting 3 and 7 kilowatt chargers into one category, and anything higher than that goes into the other category. And then we have separate 5 windows of capacity defined for DC chargers. There is a completely different lens from which we're looking at the market sizing. This basically looks at where are these chargers being installed. There are four categories that we have defined here, residential being the most obvious one. Then we have the workplace charging. That's where we not only include the charging infrastructure dedicated for the employees of the companies, and also it includes the depot charging for light commercial vehicles, buses, and trucks as well. Then we have the destination charging. So this is a huge range of locations where chargers might be installed. This includes private businesses such as retail stores, universities, cinemas, resorts. Wherever chargers are installed in these locations, they have been clubbed together into this destination charging application. And then finally, we have the in-route charging application. That's where usually the high power charging infrastructure is installed. That's where we're looking at the gas stations, application of gas stations and highways as well. And then finally, we have a completely different view on who owns the infrastructure. That's where we have these 8 customer segments defined, where the market sizing is being sliced into these 8 customer or owner types. Lastly, we have this special segmentation by vehicle type. However, this is very much limited to the private charging infrastructure. As I described earlier, that this service is designed based on how the EV market is growing. And since we are looking at passenger EVs, SUVs, buses, and trucks separately, that lets us understand that what is the impact of every single type of vehicle onto the charging infrastructure. So this is kind of a special view where we can do a double click on the private charging infrastructure by vehicle type. All right, so this was all on the service overview. I'll start off with the topic of electric vehicles. As I said earlier, first point will be understanding how the market is growing. I think we all understand how the passenger EV market has been growing the last few years. I think looking at impact of COVID-19, how actually the EV market grew in 2020 is a clear indication that it's on its way to double-digit growth moving forward. Based on the forecast that we have in the service, by 2026, the active fleet or total number of passenger EVs on the roads globally will be roughly 62 million vehicles on the roads. And with this, we can actually start analyzing or slicing or dicing the data as to where is this growth coming from. I think the most obvious one is China. Hence, you see a roughly 50% share coming from the APAC region. As we all saw that the global EV market very rapidly recovered from this post-pandemic related demand shock, which was felt throughout the automotive industry. And actually, when we look at the numbers of the year-on-year growth, 2020 actually saw a 40% growth of EV sales. So that was a clear indication that this market is on its way to very rapid growth moving forward. When we look at the key driving factors behind this massive growth, I think this all can be sort of summarized into three categories. One of them is government subsidies, plans and incentives given to the end user, not only to the end users, but also to the manufacturers of electric vehicles as well. Secondly, new regulatory environment as far as the emissions targets are concerned. We'll talk about the new EU climate action plan as well and see how new emission targets have been set for the transport sector. So this plays a huge role in the rapid growth of electrification in the passenger vehicle section. And then finally, an improved consumer acceptance towards EVs. This is also playing a huge role towards this massive growth of electric vehicles. If we talk about China, actually, this is a market which is very much driven by the incentives, the subsidies given by the government to the end users. For this, we have to go back to actually pre-pandemic time. Back in 2019, actually, this was the point when Chinese government decided to roll back some of the subsidies, which were previously announced back in 2015 and 16. This was back in March or April 2019, when the government decided that towards the end of 2020, all subsidies for passenger vehicles will be rolled back entirely. And we immediately saw an impact of that. The second half of 2019 in China actually saw continuous decline in the EV sales. So this was a clear indication that still at that point, the momentum that the Chinese market had was primarily driven by the subsidies. And then came in COVID. So at that point, the government decided to actually not entirely roll back these subsidies by the end of the year, and actually decided to extend the subsidies. But having said that, these subsidies are still being rolled back step by step. The year 2020, 10% subsidies were rolled back, and then this year, the plan is to have 20% subsidies taken back, and the next year, by the end of next year, the idea is that the complete subsidy will be taken back on the passenger vehicles. So it's not only the passenger vehicles, but also on the other segments such as light commercial vehicles and buses as well. So the question is, will the market sustain this rollback? And the idea is yes, because at the same time, the government of China has announced its new target of electrification in all four segments. Primarily in the passenger vehicle segment, the plan right now is to have at least 20% sales of passenger cars being electric by 2025 and 40% by 2030. So with this, we expect that the Chinese market will still be the dominating one moving forward, which we can see from the pie chart over here. Looking at some other regions like Europe, we see that the share is definitely increasing for European countries as well. This is where I think it's very important to talk about some of the key markets in the European region. Primarily Germany, UK, and France are the key markets which are driving the whole EV ecosystem right now in the region. Same is the case for Germany as well, where there are clear incentives and subsidies going on. They're really moving the market forward. The country plans to have around 14 million EVs by the end of 2030. So planned active fleet of passenger EVs is 14 million by 2030. So with all these plans and initiatives going on, definitely the share of these countries on a global scale is going to increase moving forward. If we then move on to the next topic of light commercial vehicles, this is where we can already see that China is definitely dominating at this point, but moving forward, we can see America's changing its share from 3% to actually 11%, which is a massive increase looking at overall how the dynamics are in the electric light commercial vehicles segment. And I think this is where we can look at both not only the public sector, but also in the private sector as well, how this is being, let's say, moved forward from ELCV's point of view. For the US, companies like Amazon, DHL, FedEx, UPS, all of these companies have defined their own targets to electrify a certain percentage of their fleet. And this results in, because the sizes of those fleets are huge, this results in a huge number of electric light commercial vehicles being on the roads in the US by the year 2026. And at the same time, the federal fleet policy plan where a total of roughly 600,000 vehicles will be electrified in the next 8 to 10 years. So this is part of the Biden's government plan to have the electrification in the federal fleets as well. So this not only includes the electrification of light commercial vehicles, but also the trucks as well, the heavy duty trucks too, used in different municipalities. It also includes vans too. So roughly 50,000 vans will be electrified through this plan. Around 1,000 ambulances will be electrified as well. And a huge portion is coming from the United States Postal Service, where the plan is to have 225,000 vehicles being electrified in the next 7 to 8 years. So with this, we can see that the growth is definitely there in the US, and same will be the trend in e-trucks market as well if we move forward, that Americas will increase its share primarily driven by the US market from 12% to 19%. I skipped e-buses. We can come back to that topic now. We all know that at this point, in terms of the global fleet of e-buses, more than 95% of the fleet is in China. And that was primarily because what happened in the last decade, how the entire bus fleet was electrified in the country. However, moving forward, this is going to change a little bit. We can see Americas and Europe both are increasing their share from 1% to 5%. One important factor from the US market point of view is the electrification of school buses. That plays a very important role in the electrification of bus sector in the country. Once again, under the new administration, the plan is to have at least 20% school buses already made zero emission vehicles immediately, and in the long run, the entire fleet of roughly 500,000 buses to be electrified by 2030 is the plan. So that's something which is really impacting the e-bus market in the region. And moving forward, there are definitely investments on the federal level as well. Roughly, there's a plan of 7.5 billion US dollars, which is only dedicated towards the replacement of the buses in the federal fleet. So that would include basically the transit buses. So this includes replacement of diesel buses, 50,000 diesel buses with zero emission buses in the next 5 to 6 years. So all these factors, both from the public and private sector, are going to impact the e-bus market in the region. As I discussed earlier, that is very similar to the ELCVs. We can expect similar patterns, but since the market is starting from a low base, so hence we see an even higher growth of roughly 44% in terms of the active fleet of e-trucks moving forward. With this, I will move on to the next topic, which is looking at the demand side. We saw how different countries have announced their own ZEV targets, and more often than not, this is in the form of percentage of electrification in the annual sales. As we discussed earlier, that China plans to have roughly 20 to 25% sales of the vehicles being electric by 2025, and then the long-term plan is to have 40% of sales by 2030. We can already see that some of the European countries, we see a cluster here in the year 2030, already plan to have close to 100% electrification, means that no sales of no ICE vehicles will be possible beyond the year 2030 in some of these countries. And we know how the growth was in the Nordics region as well, and this is something we can expect that these countries will most probably achieve their targets of electrification. This is all from the demand side, because this will generate demand, setting up clear targets of having a certain percentage of sales being electrified. One can then compare this demand side from the supply side as well, where we can compare the targets and initiatives taken by the automotive manufacturers as well. There are actually three different ways we can look at these targets. One of them is the net zero emissions target, which is basically the reduction or basically getting rid of a carbon footprint throughout the value chain. Then we have the ICE phase out, means that no ICE vehicles will be produced beyond a certain point in time announced by the automotive manufacturers. And then we have the stop ICE investment phase, which is basically no expansion of the manufacturing facilities where the ICE vehicles are produced. And I think we can right away see some patterns when we compare the clusters of the countries, that is the demand side, that how the targets are being set by the countries, and then we can compare it with how the announcements are being made from the automotive manufacturers. And this list, by the way, is increasing. Every other month we hear about a new announcement being made from the automotive manufacturers to either have the complete phase out of ICE vehicles or announce a set target of net zero emissions. But we can see there is this difference in how from the demand side or from the country's target side, we have more clusters on the left-hand side of the time series, and then we have more clusters from the automotive side on the right-hand side. And this primarily is because of the fact that if you see the cluster of countries, it's not everything. We have huge demand sectors, countries like India, even China with 20% electrification, we have still 80% ICE cars, means that for all these automotive manufacturers, the incentive to completely banish ICE vehicles is not there, because these targets have not been set by some of the markets where massive demand is generated from the automotive sector overall. In other words, only way we'll see automotive manufacturers completely abandoning ICE vehicles will be in a case where all huge automotive markets will announce clear set targets of 100% electrification moving forward. As I discussed earlier, that there is definitely this element of greenhouse gases, gas emissions target being revised in different countries. With this new EU climate action plan, this is something which is applicable to the entire region. Of course, the short-term plans have not been changed. If you look at for the passenger vehicles, for the 2030, we see a revised plan of 55% reduction of CO2 emissions from the passenger vehicle segment. And on the light commercial vehicle segment, we see a revised target from 31% to 50% in the year 2030. And then by 2035, 100% reduction of the CO2 emissions from the transport sector in these two elements. The good thing about this is that this is where we have a clear, let's say, distinction between passenger vehicles and LCVs. So there will be clear incentives for the light commercial vehicles operators as well, as compared to previous, let's say, legislations only focused on the passenger cars. In the new EU climate action plan, now actually the focus is also on the heavy duty vehicles as well. And another key element in the new climate action plan is that now there are targets being set or at least suggested by the EU in terms of the charging infrastructure as well along the highways, that how much charging infrastructure would be required in order to achieve these targets. Because we all know that how EVs and EV charging infrastructure have always been discussed in this chicken and egg framework, that you would not have enough traction for EVs if you do not have enough charging infrastructure. So this climate action plan actually addresses both sides of the picture. Another improvement would be the emissions trading system, that from the year 2026, the transport sector will actually be part of the emissions trading system, which will be a huge incentive for the companies operating in this sector. And it will impact more on the supplier side rather than on the end consumer side. And the last point actually leads me to my next topic, which is it's not only the passenger vehicles or commercial vehicles or buses where the electrification targets are being set. There are other sectors as well where the reduction of greenhouse gases is becoming a very important topic. Maritime industry is a prime example of that, where of course we do not have alternatives as of now as we have in other transport sectors like passenger vehicles or commercial vehicles. But in order to reduce the greenhouse gas emissions, the idea is to actually enforce the usage of the shore power instead of maybe using diesel generators, which, let's say, contribute a lot towards the greenhouse gas emissions from this sector particularly. And there are some markets which definitely stand out. Norway is an example of that, where we already have a huge number of shore power systems already installed. And a lot of those were actually subsidized. There are investment entities supported by the transport sector in the country who are heavily investing in the installation or in the deployment of these shore power systems. And then we have other countries like Sweden, Finland, Italy, France, Germany, where we already see a lot of traction, a lot of movement already there, some projects already being announced in terms of the shore power systems. And this, by the way, is not something which is only recommended or implemented on the shore side, but also on the vessel side as well. So to this date, most major European ports have already joined this ESI program, when around 4,000 vessels operating globally will be part of this. So it means that on both sides, on the shore side and on the onboard shore power system side, this is going to have an impact. Lastly, 2 and 3 wheelers market. Although this is something which did not have, let's say, direct correlation with the EV charging infrastructure market, which we obtained from the market models in our service, but still there's huge movement going on in some particular countries like India, China, and some countries in the ASEAN region as well. If we talk about the 2-wheelers market, already see some saturation happening in the Chinese market, where already 80% of the 2-wheelers are already electric. So that's why we can expect now other regions to have a higher share moving forward in the 2-wheelers market. And then for the three-wheelers market, primarily it's the Indian market, which is right now dominating. And at this point in time, the 50% of the sales are coming from the electric side in the three-wheelers market. So that's all from my side on the electric vehicle side. From at this point, I'll hand it over to my colleague Rafi Khan, who will walk us through the impact of this growth in EVs onto the charging infrastructure, how they're closely coupled, and what are the other driving factors which are moving this market forward. Over to you, Rafi.
Thank you, Saqib. So I'll be discussing about the charging infrastructure market. I'll be first discussing about the different policies and incentives and the importance they have. Then I'll move on to some of our market sizing results, where I'll be discussing about the volatility of the forecast, and then I'll be sharing some market sizing specific to regions and countries as well. Then finally, I'll be moving on to a qualitative analysis that we did around the evolving business models. So I'll start off from the different policies and incentives. So Saqib also told us about the importance of these incentives and government targets to drive the EV market. We see a similar trend for the chargers market as well. In our study, we looked at the chargers market from two lenses, basically. One was the public charging infrastructure and the other one was the private charging infrastructure. And in both these markets, we saw that incentives and government targets play a major role. So if we talk about the public charging infrastructure, funding from the government in order to install more chargers is what is currently driving the public charging infrastructure in most of the countries. Whereas in the private charging infrastructure market, we see government incentives in the form of different purchase subsidies. We see tax benefits. We see tax benefits particularly for company vehicles and for companies to install chargers in their workplaces and depots. Then we also have grants from the government for the residential charging infrastructure. So these are the basic types of incentives that we currently see for both public and private charging infrastructure. I will now move on to the global outlook of these incentives and how they are driving different markets and different parts of the world. We have further categorized the global market into three categories. One is the leading markets. So these are those countries which have been actively installing chargers in the previous 5 to 10 years. And they are the mature markets, you would say, of the world right now. Then we have the second category of emerging markets, which have in the past 2 to 3 years have introduced new incentives and policies in order to grow the charging infrastructure in a particular country. So these countries are the ones where we expect to see a steep growth in the next 5 years as well. And then finally, we have the undeveloped markets. These are those countries which either have very small number of incentives or policies announced, or they don't have them at all. But we do expect them to grow in the next 10 years or so. So I'll start off with the leading markets right now. So the leader in the world right now is China, and the main reason behind that is their EV and EV chargers friendly incentives in the last 5 years, I would say. So China, because of that, is currently it has more than 50% of the global charging infrastructure in their country, and that's particularly because of incentives such as their 5-year plan. So they recently introduced in 2021 a plan which is called the 14th 5-year plan, and it is focusing on all the provinces, and they have policies and targets for both EVs and EVSEs in China in all the provinces. So we expect a similar trend to what we saw in the past 5 years to continue over the next 5 years as well, since China is heavily investing over there in this business. So we see China dominating the market for the next 5 years as well. If we move towards the European region, there we see basically 4 countries which are dominating the European market right now. One is United Kingdom, then we have France, Germany, and then we have Netherlands as well, which is one of the leaders in the market of of Europe. So more than 80% of the charging infrastructure of Europe is present in these countries. And this also is driven heavily by incentives. So some examples of incentives would be, for example, United Kingdom. In the next 3 to 4 years, it plans to spend around pound 1.9 billion for the charging infrastructure alone. They've further divided it into different investments and public charging or private charging, but the whole amount is pound 1.9 billion. Then similarly in Germany, we have this famous residential charging incentive where they give euro 900 incentive for every charger that a EV driver wants to install in their home. So incentives such as these are basically driving the European market right now as well. Then if we move towards the North American market, USA is the leader over there, and in the recent past, they passed a bill of $7.5 billion US dollars for public EV charging stations for the coming few years, and we expect another uh, investment or another bill passed of around $100 billion, and that will be for the EVs in the country. And since EV chargers are also very closely related, if the number of EVs grow, we expect the charging infrastructure market to also get benefit from that incentive. Now I'll be talking about the different emerging markets of the world, and one of the main emerging markets that we see right now in the APAC region is India. So India has a very big vehicles market, and if we talk about the 2020 numbers, they had annual sales of around 3 million passenger electric vehicles. So even a small percentage of electrification in these vehicles, we would expect to see a lot of vehicles on the roads, and for that they will be needing the charging infrastructure as well. And we've seen a lot of policies and incentives being introduced in the past few years by India as well. One of the current schemes that they have called as the FAME scheme. This is the phase 2 that is ongoing right now, which started in 2019. So they are investing around $1.3 billion for the period of 3 years, which started from 2019 and is expected to end in 2022. But we then expect another phase of the same FAME scheme, which will start after 2022. So India is also investing heavily in the EV chargers market. In There are other countries in the APEC region as well. For example, South Korea, Japan, we have already seen growth in these two countries in the previous years. We expect more growth here as well. Then we have countries like Thailand, Singapore, and Australia, which has incentives as well introduced in the past few years for their EVs and EV chargers. So we expect steep growth in these countries as well. If we move towards the European region now, so Nordics is one of the countries which has been leading the electric vehicles market for some years in the European region. Norway is one of the leading markets right now with the maximum amount of electrification, but we still see that the charging infrastructure corresponding to those electric vehicles is still insufficient. And for that, we've seen that the governments in the Nordic countries are also introducing incentives, and we expect to see this market to grow as well. Then there are other countries as well, such as Italy, Spain, uh, and some other countries in the dark region, which we expect to see a steep growth in the number of chargers as well, since they have EV friendly policies, EV charger and EV friendly policies. So that's about it in the European region. Then in the North American region, we have Canada as well, where we have seen incentives around both public charging infrastructure and private charging infrastructure. All right, so now the last category, the undeveloped markets. As I said, we expect these countries to have policies and incentives introduced in the next 5 to 10 years. And we already see some markets in the South American region, for example, Brazil, Argentina, and Colombia. They already have electric buses introduced in the market. Similarly, in the Middle Eastern region, we have Qatar and Saudi Arabia, which has a lot of electric buses. So we expect EV passenger vehicles to also be introduced in these markets very soon. So in some years, in 5 to 10 years, we could say that these markets will also be called as the emerging markets. Then apart from these countries which I mentioned, the Eastern European countries, currently they don't have a lot of EVs and EV chargers installed, but with the European Commission supporting them, we expect to see growth both in EVs and EV chargers in the next 5 to 10 years. Then there are other countries in the APAC region as well, such as Malaysia, Vietnam, Indonesia, where we expect the EVs and EV chargers to grow as well. So these were some of the incentives. Now I'll move on to some of the market sizing numbers that we have, and we use these incentives and policies basically to actually get to these numbers. So according to our analysis, in 2026, we expect a market of $9.2 billion. And this currently is around $2.5 billion. This is US dollars. And apart from that, you could also see that we have different cases as well. We have a high case and then we have a low case. And in the center, we have the base case, which we think is the highest probable case. And the reason for these three different cases is that currently we see the market to be very volatile. So the forecast will also be volatile. And the reasons for that are basically listed here as well. I'll go over them one by one. The rate of penetration of EVs in the market. So you also heard Saqib saying that in 2019, China removed some of the subsidies and incentives for electric vehicles, and we saw a drop in the annual sales of electric vehicles in that year in China. So we expect a similar trend to happen in the next coming years as well, where if a country removes some of its incentives for EVs, we would see the number of EVs going down as well, and the corresponding charges to it will also go down. Similarly, the second point, implementation of government plans and incentives for charging infrastructure, that's also important. So we expect governments to continue incentives for both public chargers and private chargers in order to sustain the market or even or grow the market in the future years as well. So if a country removes any subsidy or any grant, we expect the sales of chargers to go down as well. Then lastly, we have another important point, which is of price decline of EV chargers. So currently we see both the AC chargers and DC chargers market varying a lot between different countries. So the prices in a particular country will be very different from prices of another country. So for example, China is very different from the US. So this is one thing we expect to see these prices come to converge as well. We expect to see that as well. And another point is for the price decline. Currently, we see a lot of prices of especially the DC charger prices inflated. So we expect these prices to decline over the years, over the next 6 years, particularly because the competition is going to increase, economies of scale is going to reach, and more players will also be introduced in the market. So we expect this the prices to go down as well. And if we compare the two charger families, AC and DC chargers, we expect the price decline to be higher in the DC chargers market, since currently the AC chargers market is more mature with more players, with more local players as well. And the prices have gone down in the past years as well. So we expect the DC chargers market to have a higher price decline. With this, I will now move on to some of the region-specific and country-specific market sizing results that we have. So some major trends to see in this slide. So if we look at the top three graphs, we can see that the APAC market is currently the largest market, but we expect to see the EMEA market to actually overtake the APAC market in 2026. And the AC chargers market will be the biggest in the European region. And similarly, the DC chargers market will be the biggest in the APAC region. And this will be dominated by the Chinese market again. If we now look at the bottom three graphs, we could see that China will be the leading country. It is the leading country right now, and we expect to see that in the future as well in 2026. But an interesting thing to see over here is that of the US market. So the US market will be the second biggest in the world, and the AC chargers market will be the biggest in the US. So this is particularly because of the residential charging in the US. Since there are more single family homes, we envision that the demand for residential AC chargers will be very big in the US, and it will lead the 2026 AC chargers market globally as well. In the EMEA region, we have Germany, France, and UK, which will still be leading the race for EV chargers. And in the APAC market, we then have the Korea and Japanese market to be the second and third in the region. With this, I will now move on to the qualitative some trends that we saw in the study, which are around evolving business models. So the first trend that we see is investment in China. So this is particularly from the European manufacturers right now. We in the past 2 years, we have seen that the European charger manufacturers are now investing in the Chinese market. So ABB acquired a 67% majority stake in ChargeDot. Similarly, Schneider Electric along with CICC invested around $125 million in StarCharge. So both ChargeDot and StarCharge are two biggest players in the Chinese market right now. So an interesting thing to see here is why are the European companies going towards the Chinese market? So for that, we basically listed three reasons which we think are the most are the reasons why these companies are investing in China. So the high volume market of China. So even a small share for these manufacturers in China will be a very big in number of units and revenue as well. Secondly, the cheap cost of production. So China, with its cheap labor and cheap raw material cost, along with the currently they already have big manufacturing facilities. So economies of scale is something that is being achieved in China. So that's something that these companies can take advantage of. Then finally, we see that these companies can also have opportunity to export chargers from China to other parts of the world as well. We don't see that happening right now, but there is a chance of that happening as well, since there are some local players in China, such as NIO, which is an EV manufacturer and EV charger manufacturer as well. So they are actively installing chargers, and they are also installing battery swapping stations in Norway. So they have already entered the European market. So this is one trend that we see. We expect other European manufacturers to also invest in China in the coming few months or years. Then the second trend that we have is of diversification by businesses. So in the past 10 years, we have seen that a lot of EVSE startups and small companies have come up in different countries. But now in the past 2 to 3 years, we've seen a trend that big energy utilities, large manufacturers, and oil companies are acquiring these small companies. And the reason that we see for this happening is that they either want to increase their product portfolio, or two, they want to enter new markets where they are not currently active for the EV charging business. Then The next trend that we see very similar to this is that smaller companies which are owning public charging networks are also being acquired by big utilities and oil companies. Um, we see examples from Shell acquiring Green Lots or New Motion. We see NG acquiring EV Box in the Europe, and also BTC Power in the North American market. So we have a lot of such examples as well. And the reason for that is, since the public charging infrastructure is not utilized a lot right now, and the costs associated with it are very huge. So these companies are not able uh, to be profitable, and hence it is better for them to sell themselves to big companies who can manage them better. And so so the basic thing is that we, in the next 5 years, we see that consolidation of the business will happen, where we will have fewer number of players competing with each other. Then finally, we have another trend of a 360-degree service concept. So here we are actually seeing that most of the manufacturers and even oil companies and energy retailers, they are going towards a 360-degree service, where they want to manufacture chargers, where they want to manage and operate those chargers as well. They want to have design management softwares for those chargers as well, manufactured by themselves. And then we also see some of these companies operating as EMSPs as well. So in the past year or so, we have seen a lot of examples. Some of them would be that Eaton recently acquired Green Motion, which provides all of the above services. Then similarly, ABB partnered with Charge Lab so that they can uh, offer integrated hardware and software services. And then there is another news in the market where ABB is planning to carve out its EV charging business into a separate legal entity. And the reason for that is that they want to invest more in the software business side of the EV SE market. So these are some of the trends that we see will be happening in the next few years. So this is all from my side. I will now open the stage for questions. So thank you very much.
All right, great. Thank you, Rafe. As you just mentioned, and as we indicated in the chat, please write in your questions. We do know we're a little bit over on time, so you can ask them now. You can ask them to us later. We're going to do our best to get those answers to you, regardless. And of course, as I indicated in the chat, we're going to be sharing this recording as well. So don't be afraid if you miss something there. I'm going to jump right into the questions then. So one of the ones we got a little bit earlier in the chat were, are grants and incentives the sole factors driving the EVSE market?
So yeah, Mike, thanks. I'll take that one. So currently, yes, that's what we saw, and we saw how there was a clear indication that governments were extending these grants and initiatives to sort of incentivize the end users of EVs. And we believe that this is going to be very crucial for the next 2 to 3 years, primarily when the price parity is reached between EVs and ICEs. Until that point, we believe that this will be the main factor driving the market forward.
Great, thank you. I'm going to go into the next one here. Can you please explain what factors cause the difference in prices of chargers for different countries?
That's a very interesting one, Rafe. I'll let you take this one.
Sure. So basically, what we have seen in the market right now is that where when there are more local players involved in the market, that is when we see there is more competition, and hence prices are lesser in those markets. We see other factors as well. Another one would be whether there are any country specific requirements for chargers. For example, in Germany, we have this metering requirement of ERK. So that increases the prices of chargers. So wherever there are some features which are mandatory for chargers to have, those also matter when to know what actually the price of that charger is.
Mhm.
Apart from that, economies of scale is also a major factor. So for example, in China, we already saw that the prices are very low compared to other parts of the world, and that's majorly because of economies of scale. So these are some of the factors which are actually dictating the price variation between different countries.
Yeah, I think I'll just add some portion on top of that. I think this feature set is a very crucial factor. You mentioned the metering requirements, so that does play a very important role in deciding the price. I think we discovered that in some cases it was adding 50% in terms of the pricing of the hardware, because some countries do have very strict requirements as to the metering should be extremely accurate. And you gave the right example of Germany. This is actually going to be true for countries like Austria as well as Switzerland, perhaps in other parts of the region as well. And then the other factor that you mentioned, I think very interesting trend that we saw was that even within a country, different sectors, public and private, had different prices of chargers. And that was primarily because of what Rafa mentioned, different number of players. In some cases, public sector had more suppliers of chargers. So similar looking product had a lower price point because of the more price pressure, and of course because of more number of players active in that particular sector of that country.
Great. I know we're a bit over on time. Let's see if the system lets us stay in a little bit longer to try to answer more people's questions. So let me jump to the next one. But if we suddenly get cut off, let me apologize in advance for that. So what are the new innovations in the charging hardware, and what should we be looking out for?
Great. I can start on that. So of course we have heard a lot about V2G. And this is something we now start to see that in some products there are V2G capabilities built in, especially products around DC wall boxes. This is primarily the key value proposition offered by these new upcoming products. So this would definitely be one of the topics which sort of links with the innovation happening in the charging infrastructure. Then communication protocol is another topic. How does let's say the data is being transferred to the cloud? We already saw how different companies are now trying to tackle condition of, let's say, indoor charging infrastructure. So let's say we have underground charging in a multi-tenant home situation, and we do not have any connectivity, right? And so in that case, new products are being launched where data would be transferred to the smartphone of the EV user, and then later, once the connectivity is there, the data then gets transferred to the cloud. So in terms of adding these bits and pieces into the hardware, this would be another, let's say, sort of innovation being done into the charging hardware. And then automation as well. For example, we realized that in some countries, the requirements were very strict as to who can handle ultra high power charging infrastructure. So that was resulting in some issues for e-buses and e-trucks, because drivers were not allowed to actually handle ultra high power charging. So in those cases, we already see some products out there from some manufacturers where charging would be done automatically, so as to reduce any human involvement, and hence just those requirements would not be applicable at that point. So these would be a few, let's say, topics around which innovation is being done in charging hardware.
Great, thanks, Saqib. Let's do two more here, and then of course, please, if anyone has additional questions, don't hesitate to reach out to any one of us. We're happy to get you those answers. So do you see BEVs penetrating the EV market more than PHEVs?
That's another good one. Correct, that is the trend. So previously, when we saw how every country had its own ZEV targets, PHEVs and BEVs were sort of rolled into a similar category. But now, in many cases, it is clearly stated that an EV, so a target set for an EV is actually meant for pure battery electric vehicles. And we already saw how this changed the dynamics of the market in UK, because UK was one of those markets where The total EV volume was extremely high, but a huge portion was coming from plug-in hybrid electric vehicles. But now with the changing regulations, a higher share of BEV was observed as of now. So year-to-date sales, actually BEV sales were higher than PHEV for the first time in the last few years in UK. So we do expect that to be the case in other countries where regulations are going to dictate that it has to be a pure battery electric vehicle. So trend is definitely shifting towards BEVs.
Great. And one last one before we conclude the call. How are governments addressing the issue of electricity availability from grid stations? Are there any on peak hours, off peak hours tariffs being introduced? Do we have any? Is there any support, let's say, for investors, or is it some other mechanism?
Time of use, I see. So there are two ways this is being addressed. So this is an issue in some cases. So there are two elements to this, right? So one is availability of electricity, and the other is, let's say, higher tariffs, right? In terms of the availability of electricity and the infrastructure, in some cases, yes, this has to be done. The backend infrastructure needs to be updated. This especially happens when, in case of depot charging, when you have hundreds of chargers installed at a single place. This easily accumulates to a few megawatts of capacity required. So hence, in many cases, upgrades are required on the back end. This typically means that the transformer needs to be upgraded or the cable system needs to be upgraded. So that's one part of the equation. The other one is higher tariffs. So in those cases, time of use tariffs are implemented. In some countries, we see US is as one example where this is the case. Where time of use tariffs are enforced. However, in many European countries, we do not see that this element of time of use at this point being enforced. And then on top of that, I talked about charging infrastructure at depots. Almost in all cases, we saw these chargers were managed chargers. So we actually see a growing trend where a single unit would be installed to manage multiple units of charging points. So it can actually regulate according to the requirements. Let's assume there is a requirement from the building authority that's the highest amperage that can be drawn by all the chargers, right? So that would be the cutoff. The system installed would be intelligent enough to then, of course, if you have the first car connected, you'll have the full supply of, let's say, 32 amps. And then you connect chargers in series. The moment you hit the cutoff, or let's say the ceiling, and then at that point the system starts reducing power from other chargers. This is something we see happening, or let's say new products being launched around this topic a lot, where a single unit controls multiple charging points installed. And I talked about this as an application in multi-tenant homes, but this is something which is true for the depot charging as well. You have, let's say, 100 light commercial vehicles being charged at night. And if there is a restriction as to how much amperage can be drawn, the system would be intelligent enough. Hence, the smart charging element comes into play.
Great. Well, thanks, Saqib. At this time, I'm going to conclude our call here. So again, thank you very much to everyone that joined us today. Your evening, your morning, your day. Wish you the balance of that to be great. And yeah, any questions, please reach out to us. And yeah, of course, if we run into you or we know you, great to see you again. And looking forward to meet you or see you again soon. Okay, thank you, everybody. Goodbye.